Good evening. This is the Elliott Wave update for the NASDAQ 100 for Sunday, May 22nd, 2022. Boy, did they throw a wrench into the whole picture on Friday afternoon, and it took them about 30 minutes to get it all done. It was a very interesting day up till that point. In fact, actually, it was a very interesting day all the way around. So let's just kind of jump in. I'm starting here on the weekly chart. And as I had shown previously, that the market had come down and tested the weekly 200 moving average when it dropped to 11,689. And with that in mind, the market blasted off of that level. And then it came back down and made an additional new low, pushed through and under that moving average, which gave the quick signal of like, we broke, because it not only just broke it by over 100 points. It broke it by nearly 200 points. The low on Friday was 11,491. So nearly 200 points made it a pretty clear break in my mind. But what the market tended to do right after that, and I primarily leave that up to the fact that it's like, again, there are likely some larger firms or some algorithms that got that reading, that put it together, that the market is extremely oversold. On the weekly chart, we came down, broke below that 20, caused a little bit of additional overflow, as we would expect. Again, not as intense as that buying was. So it was very, just moved itself down, slid. And what I attribute it to, on top of just some of these technical pictures, was the fact that Apple was trading down at 133 just prior to all of this starting. And you can see they got it to close at 137.59. And most of that came within the last 30 minutes of trade. So they pushed that stock $4 in the last half hour of trade. That's a lot of money being pushed into Apple. A lot of adjustments being made because of the monthly expiration that took place on Friday. It was amazing because as an X options market maker, that's the scenario that you just don't want to live through, because it drives not only you, but everybody around you into this mode that they have to scramble to cover for what may be expiring. And it just, when you end up that you can't get the options, you just have to turn to the stock, to the underlying. And that, I think, is pretty much what happened. And in that being the case, it just turned into a free-for-all. And the NASDAQ actually gained 300 points in the last half hour of trade and pushed it all the way back above 18,000. Excuse me, 11,800, 18,000, wouldn't that be a treat? Push it back above 11,800. So I had to kind of wait. I wanted to see how they were going to open it today, but I had already worked out what I felt may have taken place and how it kind of clears up a lot of the count for right now. Now, again, we're now continuing to rally up, and now we're back above 11,900, and whether they're going to shoot for the next levels up, which in the case of the daily chart would be the daily 8, which it's at 12,106. So how do we fit all of this into the picture, and what does that all mean for moving forward? So again, the larger count really has not changed. What's changing is the internals of this intermediate third wave. And I actually now want a little bit additional confirmation. So I'm laying out some labeling that puts the minor third wave at 11,491. That puts the completion point for the minor third at Friday's lows. So what we blasted out of that in was that initial 5 waves up in, that initial blast in an A wave of a corrective process. At the time, I didn't know what that corrective process would be labeled, but now I'm leaning more towards it being a minor fourth wave, which continues to keep us on track for one more down leg to finish that intermediate third. And the reason I'm sticking with that, folks, is because the intermediate first wave, which I'm pretty satisfied still with how this all is counted out, or how my count arrived at that level for intermediate wave one. But intermediate wave one is 3,826 points. If we take it from here, intermediate wave, if we were to label this as intermediate wave three and not minor wave three, intermediate wave three would then be 3,778. I just do not work very well with it being the shortest wave. Now, what it does on the alternate view that I've been running side by side, and not to be confusing, but if this is going to be an intermediate wave A, intermediate wave B, and then this ends up being 1, 2, 3, we got a 4 and a 5 to finish that intermediate wave C, or if my internal needs to be switched around, and this ends up being minor wave 3, minor wave 4, minor wave 5 of an intermediate C wave, well, then this rally should just push and not stop. So again, here's what now we are looking for to get confirmation of what's up next. Under the current count, we should have a fairly strong, decent rally in an ABC, and I would suspect we get up to here, back to 12,000, almost 12,900. And that should unfold pretty quickly. And again, it's going to need a lot of support other than, well, what's short covering on gee, we were so oversold, blah, blah, blah. That much I can go with. That's the normal ebb and flow that a market will do. But when you're going to start to push 1,000 points above the low, or close to 1,000 points above that low, I think it needs to have some additional things attached to it other than, oh, well, we're just recouping some of those losses. We're just recovering off of an extreme oversold. There's more to it than that. There has to be, because if that's all it is, then I think they slam dunk it, because if nothing has changed in that larger arena of why this market is going down, because we continue to go through the repricing part of it, we're repricing everything, folks. It's like, remember what I've talked about when at the top of that pecking order, sorry, it took me a while to find that word, and to go to the top of the pecking order, it's interest rates. And as interest rates adjust higher, as inflation continues to take its toll on our lives, the solution is higher interest rates to tighten money. They need to take money out of our hands so that we can start to just calm everything down. Without that, the wage inflation is going to push hard against corporate America, because we as the consumers need more money, because we have to go out and spend more money just to live. So it's a vicious cycle that if the Fed and interest rates cannot be brought under some type of control to put a cap on inflation, then I don't see a good path for this market just to continue to rally, to have a reason to reinflate all of these already inflated prices. So again, what we're readjusting, and people are going like, well, how could the market go down? If you think about how overvalued many of these companies became, we're seeing that when it comes through that Walmart announces earnings and they pound the stock. When Target announces earnings and Target's above $200, which is like, you know, if you've been trading Target or just know of Target for a long enough period, it's not a bad company. They serve a very strong market here in the United States, and they're well run, et cetera, et cetera. But to push it above $200, I don't know if people have actually taken the effort to stand and figure out how much does that Target have to earn and report in earnings to support $200 a share. So again, we're going through the repricing. And what happens is Target reports their earnings. They are not well received. I don't know what in God's name they were expecting when inflation hits us going to the store and buying higher priced items, et cetera, et cetera. So this repricing is at work here. Whether we want to accept it or whether we don't, it's still going to happen. Whether we as traders want to accept that the market has it got way ahead of itself and pumped a lot of value into companies that just didn't belong there. So these were overpriced, overvalued. And now we're doing the repricing, revaluation of all of the equity markets, as well as the bond market, as well as other things associated, as it continues to filter down. I don't see that being over. I know many people want it to be over. They want to go back to a bull market. They want to, just because that's what they're used to. That's what they can accept. But let me just say, the easiest way to trade this, folks, truly, if you're choosing to trade and you can move easily in and out of the market, do not be bullish, do not be bearish. Because I'll tell you, when they came in on Friday afternoon and they started to take that higher, if you were short thinking, well, I think we go back down, so I'm just going to hold on, you got massacred. If you continued to try to short it on the way up, you got massacred. So why should we continue to adhere to something that isn't happening? In other words, they weren't taking it down. Every signal by breaking moving averages was telling us this market is going to go up. So you buy it. So it's not that I'm a perma bear. It's not that I'm bearish on the market. I'm neither. In fact, I really prefer both to occur every single day in copious amounts, because then it's producing strong enough moves to capture large profit. It's easier to trade when the market is going to trend up or down. And so whether I'm bullish or bearish, I'm not. Whether the market wants to be bullish and bearish, I don't care. But I can play the price action. I can trade price action. I can trade it because I get enough signals from moving averages, from the Fibonacci, from the Elliott. I can piece together a picture. So while I may have been surprised by the intensity of the move, I certainly went in and traded it. You had to, as a trader, you got to go in and trade it. I think it's foolish to stand back and let it happen. Same thing on the downside. As they're marching this market down to 11,491, why wouldn't you trade it? That's the thing that gets me. Why wouldn't we trade it? It was obvious that they were taking it lower, and it's not that it was racing lower. It was just marked, and they sold, and they sold, and they sold. So they just hit bids, and it broke moving averages, and it broke support levels. Those were signals. Why wouldn't I take them? I don't have to be bearish or bullish to take a signal based on price action. You just need to do it. So let's take a peek at what could take place tomorrow, because that's still sitting on the fence, folks. Great little rally that we've seen, but I'm going to open this up on the hourly. So what I can see right now is a 1, a 2, a 3. This is the little 4, and now we got the 5. Now, if that's the case, then we could get either that's going to be wave A, even if it's wave A of this larger fourth wave, or is it a wave 1 that would produce a much, much larger move? And I don't necessarily see that, but I will be open to it. I'm not going to declare that can't happen. That's just setting myself up and everybody else for disaster. So here are the possibilities, and we'll try to put some probability levels around it. But right now, we still can, I still can leave this open as to, did this complete 5, Or are we still working our way down? Because this market can turn around and just dive as quickly as it ran up. We've seen it. We've seen it. We've seen it. Run up, dive down. Run up, dive down. Run up, dive down. Run up, dive down. Run up, dive. We get this, dive. We got this, dive. Just because they decide to run it up and get it, really give it a boost, doesn't mean that they won't walk in tomorrow or walk in as this progresses around the globe into China and then, and not China, into the Asian markets and then into the European markets. And they just know, they turn around and they sell it. And they bring it all the way back down and push it down below those lows. Then the downside's back on. So I'm going to stay open to both. But right now, the way the Elliott is working out for me, I am going to put the minor 3 here. And if that's the case, then what I'm looking for is an ABC structure up that eventually, here's the one large area, 12,594. That's going to be stiff resistance. But before it can get there, it's now broken above the 20, gone up, come back down, tested it, and now the rally's picking up again. So that's on the hourly chart. See? Came up, broke the 20, rose up, came back down, sitting, has tested it, and now is continued. In fact, it hasn't come back and tested it. It's sticking above it. What's the next thing? Well, 19,557. That's where the 50, the hourly 50 is. And a break there. Now we're looking at 12,100. Then we have the 200 moving average, the hourly 200 at 12,226. That on a break here would likely be the next target. Then we have some fib resistance at 12,357, not too strong, but maybe that's where the A wave gets to. Then we pull back, then we do a C wave, and that gets us up into here. Then we roll over, that's a minor 4. We roll over at a minor 5th. We come back down, we get ourselves back into this area that should complete that intermediate third, which is sub 10,000. That picture has not decreased. There's no reason for me to really just knock that off the boards and say, oh, well, 2 days of bullishness, boom, that takes that picture right out. No. If you want to discuss the bullishness with me, that's fine. We can do that. But if you want to say, well, the market's bullish now, and then we're going to go to new highs, you better have a good reason as to why. And not because somebody thinks the market's oversold. That ain't good enough. You cannot support a continually rising market because it was oversold 1,000 points ago. So we'll keep this all in mind and understand it's still going to have volatile moves. We're still going to go all over the board here. This right now, as we open up in the Globex session, is nothing more than just how big firms, the trading firms, the HFT firms came out of Friday's expiration. And do I blame them wanting to say, hey, let's just get flat. Let's just kind of deal with these open positions and let's get ourselves lined up so that we're all set for Monday? No, I think that's a very wise choice because who knows? Who knows what's going to happen? I'd rather start with a clean slate and we're all clean and just focus on price action rather than I'm protecting or trying to cover or trying to do something with a position that could kill me. So let's keep all of that in mind and not, you could still approach this market bullish or bearish. It's not up to me. It's up to each of us as an individual. I prefer to do it trading the price action, trading what's in front of me, and being open to trading both directions freely, openly, without having to wonder why it's going up. Who is bullish? What is moving the market? How is this market going up? When will the market stop? The who, what, where, when, and how, it just doesn't make any difference. The market will let you know with plenty of time. But if we all had the magic key that we could tell, it's like, yep, it's going to get to that point, we'd all be billionaires. But that just doesn't happen. And I think it's unrealistic to try to pinpoint an analyst or pinpoint anybody into, well, where do you think it's going to bottom? Well, where do you think it's going to top? And give you a range, but not everything is not held. You can't. It's just not realistic. So for tomorrow, let's play it as it comes to us. Right now, coming off from here, we have support right at that 20, which is sitting at 11,065. Excuse me, 11,865. I'll get my numbers right. To the upside, we've got that 11,957, which is where the 50 is. They're still going to play in this little level. They just dropped it $20. They're going to race it up $20. And we still got to go play for all of that. And to what kind of volume is already beginning? Oh, we can take a peek. 12,000 contracts. That's not too bad in a half hour. You know, when you don't have all the players involved on a Sunday evening in the Globex session. So that does kind of keep the markets a little bit on the wide side. And it does keep things moving pretty quickly and all over the place, to be honest with you. Okay, so if we're in an intermediate, a minor fourth wave, then I'm definitely looking for it to come up at least here, 12,590, 12,600, let's call it, up to 12,900. So that's a pretty nice range. It's a 300-point range. How soon can it get there? Well, one would think that we're working on, it's not a shortened week, I believe, because we have the following Monday off. So a week from tomorrow is Memorial Day. But I think we're going to line it up so that whatever may happen before the end of the week or at the beginning of after the holiday. We'll see. But that's just a thought. Again, I got to take it day by day and let the market tell me. So on the downside, if this market starts to give up the ghost, it's going to slide just like it did on Friday. It's just going to do it. But excuse me, we're going to have to understand that it's still completing then this fifth, if I'm going to call it a fifth, this third, if we're going to, you know, whatever label I'm going to put on, it's still in that process. This is just an alternate view that I have run congruently. And you've seen it before, where I started the minors up here and not this minor down here. So putting it back up there, then I can fill in the third. All right. Then I can work out this third wave. And it works out very cleanly to here. And then it fits within the context of the larger third wave. So ultimately, folks, it's the market that tells me what is to be cast in stone, so to speak, for the count. Otherwise, we're in a fluid market and we must remain fluid in terms of what's forming. It's not me that's going to tell the market what to do. I'm certainly not big enough, and I wish they did, because then again, I'd be the billionaire. But it's not. We take our clues from the market itself, and that's accumulation of all the different trades, all the different traders, all the different firms, all the buyers and sellers. And how does that all balance out? So that's what we put in. So on this downside, let me just take this off for a moment, because what I will put back on is our downside. Again, I'm just going to go on this intermediate level here. So we're getting it up for the intermediate third wave. And this is going to be estimates because I'm not sure that I'm absolutely certain. We're still down here. 9,100. So if I adjusted my numbers, I'm sure it's going to come down somewhere about 90, 70 is where my levels were before. So plus or minus. You know, here it's plus or minus 40 points. So we still, that level, it's 9,100 down to 9,000. I'm going to give it right now. And we can get there real quick because this market remains in a position where it could just turn and puke, just turn and just crash. There's enough out there where it's just like all of this folly, boom, boom, crash. And they could come in and do that tomorrow. So again, everything remains on the table. Breakdown, it's going to slide through all of those moving averages. Come on, don't do it. Don't do it. Oh, God, this thing's such a pain. Let's go back up to the daily and let's just open this up. Thank you. Well, I don't really have any moving averages here, but it's just going to slide. And as you can see, even with this fantastic rally that we had on Friday afternoon, and then what we're still pointing higher right now, check it out. This is the daily. Everything is still lined up. It's just coming up and toying with the daily 4. Now you're looking at this little small picture going like bullish, bullish, bullish. It's like really the daily's telling you, well, we're not so sure yet. So let's not get ahead of ourselves. Don't be looking for the who, what, where, when, or how. Look for the signals that are going to tell you, oh, we've just got a green light. We're going to push a little bit more. That will bring in additional buyers. It will set off a bunch of algorithms that will come in and buy. One of them would be breaking and closing above the 4. Breaking and closing above the daily 8. Breaking and closing above the daily 20. This market needs to set the standard by putting in positive trading days in terms of the movement on a daily chart. You want this market to go up over an extended period of time. This chart needs to turn positive, and it's not yet. The weekly chart is oversold, but on this level, it can remain oversold. It can still crash from oversold. This was sitting right here when we did Friday. It just went a little bit deeper, but now it flatlines. It can flatline for the rest of the summer. Doesn't make a difference. But back to reality. So I don't want the 30, I want the hourly. So on this hourly chart, you see they drop it down. They're trying to get it back below 11,900. Every time they do, somebody walks in, they buy it up 15, they buy it up 20. And that could just go on for a while. So we're not going to get too concerned with that. Same deal. Starts to break the 20 and cleanly and closes, gets an hourly close below it. That should give us some additional downside pressure. A break below the 8, give us downside pressure. Hourly chart needs to get more positive. The 4 needs to get above the 20. The 8 needs to get above the 20. It's not even close yet. It's relatively, but it needs to get up and get above it. That'll add upside pressure. The 20 moving above the 50, that'll add upside pressure, but it's going to take a lot more pressure than what we're seeing thus far. All right, I'm going to end it right there. Continue to use the moving averages, use the Elliott, use the Fibonacci. You can draw them intraday, highs and lows, and you can pick out retracement levels. If it breaks all the way, then you got to go bigger. And you just keep going through your points and you do your fibs, and that'll give you next level. Moving averages give you next level. And remember, a strong enough break above the 20, and it's right now looking pretty good, we should reach 19,957.58. That's where we should get. If we break, come back, test it, don't break below it, and then keep going. This is where it's heading next. Okay, gonna end it there. Our next update will be on Monday, May the 23rd.